Hello and welcome to Markets Today. I'm Lata Venkatesh and with me is Surbhi Upadhyay. Well, the 8-day rally finally came to a close and while we did get a sense that at 8,400 it was a stretch for the Nifty to stay put, the Greek deal coming off around closing market hours did help to pull down markets rather rapidly. So now it looks like as the June contract expires, 8,400 could be a tough ask. Hi, Surbhi.
Hi, Lata. Yes, absolutely. Some drama in the last half an hour of trade. Plenty of volatility. Well, there's a lot to talk about. Let's start with the headlines. Volatility hits the Wall Street ahead of expiry day. Benchmark indices reverse course in the last hour, breaking an 8-day winning streak. The Nifty falls 0.25%, closing below 8,400. The Sensex loses around 75 points. Metal, Realty and PSU bank stocks lead the decline.
The mid-cap index falls 1%, underperforming frontline indices. Sun TV tanks another 9% as the uncertainty over security clearance to the group's channels continues. Persistent Systems tanks 12% after the company issues a profit warning for the first quarter. PSU banks like UCO, Union, Allahabad all fall between 3 and 5%.
The monsoon session of Parliament is all set to kick off from the 21st of July. The short 3-week session is expected to be a stormy one, with the Lalit Modi controversy threatening to overshadow the passage of the land bill.
Well, those were the headlines, and here are the experts that we have lined up on the show for you. Saurabh Mukherjea of Ambit Capital and Sandeep Bhatia of Kotak Institutional Equities are joining us with their take on where the market's earnings and the economy are headed. Senior lawyer H.P. Ranina will give us his views on the issue of security clearance for Sun TV's channels. And of course, we'll also get you the management's, actually the chairman and managing director of Marico, Harsh Mariwala, to talk about rural markets and rural demand in the ensuing season. All that in the next half hour, but first up, Surbhi, you want to tell us about the markets?
Oh, yes, absolutely. And as we were talking about that intense drama coming in over the last 45 minutes or so. And of course, it was the big international story that was Greece, which hit Indian markets quite hard towards the end of trade. The Nifty lost close to 50 points in the last half hour, and it finally ended below the 8,400 mark. The Sensex shot around 200 points off from the day's high. We have Anuj now joining in to take us through the details. Anuj, once again, I mean, should we say blame it on Greece?
Yeah, the market was quite volatile actually only in the last half an hour of trade. Till 3 p.m. the market was quite fine and it looked like, you know, that 8,400 level was holding out. But then that Greek problem or, you know, again the risk of Grexident as it's being called, that again came to surface on the deal being rejected. And you saw the kind of impact on the European markets, and that had an impact on the Indian market as well. In fact, the Nifty lost about good 50-60 points in last 30 minutes. It's only the averaging that got Nifty above 83.50. Otherwise, the last closing rate on the index was well below the 83.50 mark. The Bank Nifty slipped well over 100 points in last 30 minutes, and mid-caps underperformed through the day today. And there was quite a bit of selling in high beta names. Let's talk about some of the stocks that led the market down. As you would expect on days like this, it's the PSU banks and high beta stocks that take the highest punishment. So PSU banks were lower today, PNB down 4%, Bank of Baroda 3%, and SBI down about 2%. Apart from that, in the high beta space, you had metals which were down like Hindalco, Tata Steel, NMDC, all lower. Hindalco down 3.5%, Tata Steel down about 3%. And of course, you had some other commodity stocks like cement also falling in trade. Ultratech, ACC, Ambuja, all lower by about 1.5 to 2.5% in today's trade. Some other prominent Nifty losers included Mahindra & Mahindra, a stock which has been doing well otherwise, 2.5% lower today. Tata Motors was down 1%, and same was the case with Bharti Airtel. On the winning side, you had some big winners today actually. In the defensive space, Lupin was up 2%, Lever was up about 2.5%, and BHEL was the surprise winner of the day, up about close to 4%. Finally, in the mid-cap space, some prominent losers today included Sun TV, where there again some problem in terms of what's happening with its license. That stock was down about 9%, JP Associates 6% lower, and Voltas was down about 5.5%. Tomorrow morning, the market may well have to contend with two issues. One is weak global cues if the global correction extends on the back of this Greece issue. And second, tomorrow is the F&O expiry. So all set for a volatile day of trade tomorrow.
All right. You said that, Anuj, volatility tomorrow, in any case, it is expiry of the options trade and of a contract where we saw the market gain over the last 8 days. So there would be volatility. More importantly, however, today we saw some signs of risk aversion. As Anuj put it, defensives were preferred. So look at the gainers. HUL, there was specific news related to the stock itself. It's likely to buy a prominent brand in Duleka. But the other gainers were also Lupin, Sun Pharma, our IT stocks like Wipro, HCL Tech. So clearly there was a defensive flavor to the market today, want to avoid risk. That seemed to be the trend. There was also a goodish bit of taking money off the table, taking profit off the table. Look at the stocks that lost, besides Sun TV, which of course had the uncertainty of continuing with its licenses hovering over it. That stock down about 9%. Also stocks like Voltas and UPL. United Phosphorus and Voltas have been really, especially UPL, was a one-way street for the past so many days. But today clearly people thought that it's time to take profit. So at least the long hands and not just the investment types were taking off some profit. As well, bad news got punished. Persistent Systems, which gave a profit warning, distinctly saw a decent amount of profit taking. Bharti Infratel, I forgot that. Another stock which has seen a robust performance through ups and downs, again saw profit taking. So today, that was the story. Weak stocks got punished, but strong ones also got punished on profit taking.
All right, so those are internals of the market action. On that note, let's bring in our first market voice of the day. Saurabh Mukherjea, CEO of Institutional Equities at Ambit Capital, says that despite the recent spate of volatility, global investors continue to remain positive on India, particularly in the pharma, IT and FMCG sectors.
I think we will start seeing FIIs try to rotate out of cyclical sectors. That's industrial, cement, frontline banks, auto, and I think you'll start seeing a rotation towards sectors such as chemicals, pharmaceuticals, IT, and other consumer discretionary plays, which for whatever reason have been less impacted by the downturn. So I think we see a distinct shift in the phase, distinct shift in emphasis away from cyclicals. Over the next decade, if you were to take a longer view of India, as these reforms that the NDA is trying to push through, as they bite, my reckoning is gradually we will rebalance, the Sensex will rebalance towards more consumer discretionary names. Pidilite is one name in our Sensex 2025 list, and also banking and financial services names such as Kotak, IndusInd. I think it's just a matter of time before those sorts of banks make an entry into the Sensex. So we will become an index which will be lighter on metals, mining, oil and gas, heavy industrials, and heavier on BFSI and consumer discretionary.
Okay, so that was a cautious CEO of Ambit. On to a CNBC TV8 exclusive. India's first Infra Investment Trust, or InvITs as they are called, may soon see the light of day. CNBC TV18 learns that the debt-laden GMR Group is looking to list some of its roads portfolios under InvITs. Ritu Singh joins in to give us the details of this story. Ritu, how much is GMR looking to raise by this listing, and when is it likely to happen?
Tata, GMR clearly needs a lot of funding given that the debt on its books is over 40,000 crore when you look at the consolidated balance sheet. So this is just one of the ways the company is exploring to bring down that debt burden. Now we do understand from sources that are directly involved in this transaction that GMR, through its roads portfolio holding company, which is GMR Highways, that is looking to list some of its road assets to raise about 4,000 crore rupees. These will be listed under the scheme that you mentioned, which is InvITs or Infra Investment Trusts, making GMR the first company to launch this trust. Of course, under this trust, it'll take some of its road portfolios from the 6 highway projects that are completed under its books and list them on the exchanges, so they will be able to generate some income for the company. The idea for the company really is to get rid of the corporate debt, at least, which is the debt that is not backed by cash flows, to just completely do away with that through this particular listing to raise enough money for that. We do understand that while it has not appointed formally advisors yet, Citi, Nomura, Merrill Lynch, as well as Nomura are some of the investment banks that are advising GMR on this transaction. And although given that this is the first InvIT that will be launched by an Indian corporate, there is a lot of to and fro happening between SEBI and the company in some taxation clarity that GMR has sought, and therefore there is some process. There's about 6 months is the time that it is looking, keeping in mind for when it will file a DRHP with SEBI come at the end of the year. We did reach out to the company for their comments in this particular story, and although they said they do not comment on specific deals, they are constantly looking at ways to raise resources and bear some of that huge debt burden that they have.
All right, Ritu, thanks so much for getting us exclusive details on that story. Well, speaking of stock-specific action, the Sun TV counter has been under the weather for quite some time now, and today was no different, with the stock falling almost 9 to 10% in trade. This as there is still no clarity on whether the security clearance for its 33 channels would be cancelled or not. Manglam Alu is now joining in with more details. Manglam, what's the latest that you're picking up?
Well, that's correct. You know, the Sun TV group continues to be in focus and the stock under pressure. In fact, it was the biggest loser on the mid-cap index today due to various regulatory overhangs. In fact, just to give you a brief background of the story, a couple of weeks ago on June 6th, the Ministry of Home Affairs did deny security clearance to 33 channels of the group, citing economic security problems. Remember, the promoters of the Sun Group, the Marans, are facing various charges on account of economic offences. Now, the Ministry of Home Affairs did deny the security clearance, but whether to give the license or not is to be taken. That call is to be taken by the INB Ministry. The INB Ministry sought the Advocate General's opinion on this denial, and on June 18, CNBC TV 18 learned that the AG was not in favour of this denial to Sun TV. In fact, Mr. Rohadki also said that denial of this clearance to Sun TV is illegal and legally not tenable. However, yesterday the stock continued to be under pressure as reports in the newspapers said that the Prime Minister's office has finally weighed in on this matter, and they find more merit in the Ministry of Home Affairs argument. In fact, they say that any lenience shown to the promoters of Sun TV or the group will create collateral beneficiaries among other promoters who are under the radar for such economic scams. However, CNBC TV 18 also learned that the INB Minister Arun Jaitley finds no legal merit in denial of these licenses. In fact, he also says that this is legally not tenable and will not stand in any court of law. In fact, we also learned from highly placed sources in the Prime Minister's office that the PMO is against any kind of ban in general. So while the skirmish between the ministry continues, we have to also understand this from the perspective of Sun TV, where 88 to 92% of revenues and all profits are generated from these TV channels. In fact, shutting down the network will obviously be an unprecedented event because that's never happened, and we see a long drawn court battle or a legal battle in case the licenses are cancelled. However, there is a strong likelihood that if the licenses were cancelled, they could get a stay order on the proceedings, because that's what happened with the radio business as well. But the current unfolding of events, we need to also keep in mind, does not affect the day-to-day running of the company. But the stock will continue to remain under pressure and in focus due to various uncertainties, because that's what the market does not like. However, at CNBC TV 18, we also spoke to senior lawyer Mr. Ranina. He gave us a brief detail and perspective on this case. Let's listen into him.
Security clearance depends on other issues, and the Home Ministry is concerned with issues of, security. Security means, we obviously mean things like terrorism, things like criminal activities, etc. But if it's a pure economic offense, then that cannot be a ground for denying a constitutional right which is guaranteed by the Constitution. And to that extent, I agree with Attorney General's opinion that it would be, if you try to, they will challenge it in a court of law, and the court most likely will strike it down as unconstitutional. Therefore, just because they're economic offences, I don't think it can be a ground for denying them this the right to telecast their channel.
The stock of Jet Airways jumped yesterday on news that UAE's international carrier Etihad Airways was increasing its stake in the Naresh Goyal promoted company. Etihad, however, has denied the news, but with India as its largest market, Etihad said it is looking to continue developing products jointly with its alliance partner, Jet Airways.
Well, we're working to a plan.
Sure.
And the plan is robust.
Yeah.
And the plan will ensure that the stability and the of the airline group moving forward.
But if need be, would you look at increasing your stake in Jet Airways?
Well, that's for the shareholders.
All right, so not giving a specific commitment on any further increase in the 24% stake that they already own in Jet Airways. Moving on, the monsoon session of Parliament will begin from the 21st of July. It will be a short session, now comprising of just 3 weeks, but the government will have its hands full with some crucial legislation slotted to be taken up during the session. One of the most contentious bills that's likely to give the government some sleepless nights is the land acquisition bill, which is currently with a parliamentary select panel. Another key economic bill is the GST bill, which is also lying with the Rajya Sabha committee. And it is imperative for the government to get the bill through the upper house of Parliament within the monsoon session in order to meet the April 1st, 2016 deadline for the rollout of the goods and services tax.
Okay, on that note, let's take a break. We'll come back with Sudarshan Sukhani, who will be giving us some technical ideas. We'll also speak about other stocks which were in the news today.